I've been in the trading space for over 12 years, and I can confidently say that the indicator that I'm about to show you that I've been using lately for my own trading has completely changed the game for me. I'm not even a big indicator guy, really. I like price action, but if I told you that this indicator tells me basically when to trade the trend and when to trade against it with pinpoint accuracy, high probability, would you believe me? Probably not. But that's exactly what I'm about to show you. Make sure to like, comment, and subscribe for more content just like this, and let's get into the video. So what is this elusive indicator, this game-changing indicator? Well, it is called the VWAP. Now, before you leave the video, because you've heard of the VWAP before and you say it doesn't work, blah, 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 sit back down, just give me a second, because you're going to want to watch the rest of this video, because I guarantee you, you haven't seen the way we are going to use it in this video. So for those of you that don't know what VWAP is, VWAP stands for Volume Weighted Average Price. Basically, very simply put, it's an average price that takes volume into account. So for example, if you have more volume at a certain price level, that price level is going to be more weighted when calculating the average price. So it's basically just an upgraded version of a moving average that actually takes the volume into account, which volume equals intention. The more volume you have, the more power you have, right? So it's important to factor in the volume when calculating your average price. So that is the volume weighted average price. Now there's a little secret on the VWAP indicator on TradingView that I have not seen many people use, but it makes a huge difference and has been personally the game changer for me. And that is going to be the lower and upper band settings here and here. Now what this does is, very simply put, this upper band is 2 standard deviations away to the upside. This lower band is 2 standard deviations away to the downside. Now if you don't know what I'm talking about, if you remember math class, maybe you never went, maybe you didn't graduate high school, or maybe you're still in high school, but if you remember math class, basically you have the mean in the bell curve, okay? You have the average of whatever the data that you're collecting is, you got the average, and then you got the 1 standard deviation, the 2 standard deviation, and the 3 standard deviation. Now, 95% of your data is going to fall in between 2 standard deviations. If we apply this to this VWAP, basically what we're doing is we have 95% of price action is going to take place above and below these 2 bands here. So imagine how much better your trading could be if you just understood, for example, that whenever we are below this line, we have a 95% chance of basically trading back above that line. Now that's not exactly how we use the VWAP, and we'll get into how to use it shortly, but what this does is it basically gives you guardrails to focus on. And it gives you a range that you know price should stay within for the most part. Now, let's get into how you can use this for trend trading, and then we'll get into how we can combine this indicator with another indicator in order to capture almost perfect reversals. So whether you're a trend trader or a reversal trader, this is going to help you a ton. Now let's talk about how we can use this for trend trading. So let's start off with the actual volume weighted average price itself, the VWAP. That is the average price, the mean level, okay? That is this blue line you see right here. First rule is that when you are trading a trend trading strategy, whenever we are below this blue line here, you're going to want to look for shorts. Whenever you're above this blue line, you are going to look for longs. And it doesn't even matter what you're trading, this works across the board. So let's take a look at some examples. Let's look at today, what we're trading right now. Almost every single short, no matter what kind of short you took, almost every single short today would have worked as long as we are below this blue line here, okay? So let's just take a look at all the trades. If you are a trend trader, all of the trades that you could have taken on this day pretty much blindly, and they would have worked just because you know that as long as we're below this price, we will continue in that direction. We have a high probability of continuing in that direction, okay? Let's just take a look here. We have a lower low, a lower high, potentially some shorts. Target the lower band, okay? We're always targeting the lower band, all right? Lower low, lower high. Target the lower band, lower low, lower high, lower low, and then finally we start to kind of move back up. The trend begins to break down. But either way, pretty much all of your short trades would have worked out in this entire downtrend, obviously, okay? Now, this is hindsight, so let's take a look at some other examples, right? So now let's go on the long side, right? By the way, really quickly, if you don't have enough capital to trade with, a great solution is prop firms. Prop firms, if you don't know, they're basically a firm that will give you money to trade with if you can prove you can trade. So if you're looking for something like this, you have the skills to trade, but you just don't have enough capital, check out Take Profit Trader, link in the description down below. You automatically get the best deals, so don't settle for full price if you use that link in the description. And that's for futures trading, but if you want to trade Forex or crypto, feel free to check out FundYourFX. Also get the best deal using that link in the description down below. Disclaimer, FundYourFX is not available in the United States. Let's get back to the video. Let's take a look at yesterday's price action and just look at the blue line, okay? Now, what did we say? As long as we're above the blue line, we are only looking to buy if we are a trend trader, right? And we target the upper band, right? So we're buying around the blue band and selling at the upper band, okay? Almost any trade that you took long on this day, any buys, whether it's here, all of these potential buys would pretty much have worked out. At the very least, it would have been a less stressful trade buying above VWAP, right? Because price never went below the VWAP. Again, this is hindsight, so let's just take a look at another day, right? Let's just go back to another session. This is on a 1-minute chart, by the way. Okay, once again, we're above the VWAP. What does that mean? We look for longs. Look at this. Higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, equal low, higher high, lower low, and then eventually we still move higher since we're above that VWAP. Almost any buy trade would have worked as long as we're above VWAP. So when you have VWAP on your chart, now if we didn't have this, we wouldn't really know where the extreme point is and where the average point is, right? But with VWAP, now we kind of have a guardrail and we know what direction we're likely to start heading towards and what type of trades are going to be less of an uphill battle, right? You have the wind on your back. As long as you're above VWAP, buy trades are going to be easier trades to take. And when you're below VWAP, sell trades are going to be easier to take in general. Obviously, it doesn't work 100% of the time, but now let's talk about how we can use VWAP for reversal trades. So the point is, in this video, I'm not even teaching you a specific strategy, and yet just using this one indicator will improve whatever strategy you're trading because it will give you that guide, that guardrail to know, let's say your strategy is telling you to buy, but we're below VWAP. Well, maybe you might reconsider it. Or if your strategy is telling you to sell and we're above VWAP, maybe you won't take that. Maybe you'll only take the signals that you get when you have the confirmation of being below or above VWAP. Now let's get a little bit more complicated and introduce our second indicator, and that is going to be the ATR, the average true range indicator. So specifically for day trading, what we want to do is we want to know what the average true range is for the last 7 days. Okay, so let's go to the ATR here. Let's go to inputs and let's change that to 7. Okay, so now we have the average true range for the last 7 days. What does this tell us? So the average true range tells us that we should stay within, on average, a certain range, okay? So why is that important information to us? Whether we're trend trading or we're trying to capture a reversal, if we know exactly how much price should move on any given day, we can determine whether it's a good idea to be following the trend or maybe even taking counter trend trades, especially when we combine it with the VWAP, okay? Now let me show you how you can do this, for example. So let's look at today, for example. So we see that the average true range is roughly 446. So we know that this candle here between the high and the low should roughly not exceed 446. On average, it's going to be either that number or less, right? Or close to it. So let's take the high point to the low point, and we'll see that we are currently down 488 points from the highs. That means we've exceeded 1 ATR. So if we go down to a lower time frame, like the 5-minute time frame, and we go to our session high, which is right here, okay, from our session high, our ATR should be 446. So let's just mark out 446. Let's call it 450 even. And we just put a line right there, mark it out, and that is our ATR max, right? We'll call that ATR max. So if we know that on average, price should stay within this ATR range, when we're trading the market open, for example, here at 9:30, right? The market opened, we know that if we are looking for shorts, we should be looking for shorts as long as we are above ATR. because that means that there is still room to move lower. And the same thing applies for the upside as well. If we are looking for buys, we have to know where our ATR is on the upside, okay? This is just a downside example. So if you're a trend trader, first, you want to know what is the trend, right? Well, if we're below VWAP, the trend in general is going to be down. The pressure is down. But how do we know if we are too early or too late in a trend, or the end of a trend? Well, what we can do is make a rule that we only short as long as we are below VWAP and above our 1 ATR point. Because once we get to the ATR point, that means that we've pretty much moved the maximum amount that we move on average in a given day. But if we're above ATR, that means that we still technically have room to move lower, right? We haven't moved our average for the day. But now, if you're a trend trader, not only do you always know the trend, you also now know if you are early in the trend or late in the trend, because now watch what happens when we start getting towards this ATR. Price begins to kind of have that struggle to remain in its downtrend, right? So let's take a look before the ATR, right? We have lower low, pretty much effortless lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. And as soon as we get to ATR, what ends up happening? We get a higher high, and then we get a lower low, sure. But now look at what's happening. We're starting to struggle and we're starting to pull back, and it looks like we may start getting another higher high. So the trend immediately starts to weaken once we get to that ATR, which means that once we do get to that ATR, we should no longer be looking for shorts. Now, this is where reversal traders get to come in. Okay, so now that we understand how to use VWAP and ATR for trends, let's talk about how we can use it for counter trends, okay? So because we know that ATR, the average true range, is how much price moves in a day on average, and then we have the volume weighted average price, or the VWAP, and we know that price should stay 95% of the time above this lower band and below this upper band. Now we can use this information to take reversion to the mean trades. And this just means a counter trend trade. So earlier I said that if you are below VWAP, you want to look for shorts. If you're above VWAP, you want to look for longs. And that is the case most of the time. But once we get into an overextended market, which is when we reach close to our ATR for the day, our average true range, okay, which we know is 450, which is right here, we marked it out. Once we reach the ATR or close to the ATR for the day, reversal traders can now use this information to capture a trend reversal, because what usually ends up happening when we reach the ATR is we'll also get some pretty close price action to the second standard deviation lower band here. Now, all of this area here, anything below the ATR and close to the second standard deviation, is very high probability buy points in this example, and we'll look at another example as well. But what we can do, knowing this information, is we can now start to look for potential buys all the way back up to our VWAP. Okay, this is called a reversion to the mean trade, and it just means that we're looking for a move back to the equilibrium price, right? The VWAP is the average price. On average, what price are we at? It is the VWAP, right? If you're a reversal trader, you can use ATR and VWAP to get precise reversal trades, okay? Maybe you don't just buy at the second standard deviation. Maybe you wait for a new high and then you buy and you target the ATR. Either way, any buy trades below this level here has a massive risk to reward and a higher probability of working out. So let's take a look at some more reversal trades, because we've seen a lot of trend following trades, but let's just take a look at, again, let's say yesterday's price action, okay? Or 2 days ago, I'm not sure. Let's take a look at VWAP. We see that we stay above VWAP, but what happens? Once we get towards the second standard deviation, first of all, we have a very overextended uptrend. Okay, this is, let's see here, probably about 200 points. So that's 200 points. That's about half an ATR, but it's half an ATR in one direction, okay? So is this the most overextended market ever? No, but just in general, if we just look at the price action, this market has been in an uptrend for a very long time. So once we start reaching the second standard deviation, the probability of the trend going much higher than that decreases. So what we can do is we can actually look for shorts here at the second standard deviation and target the blue line, which is the mean, the VWAP, the volume weighted average price, and take a look at how that works out. So let's just take a look at some more examples of reversion to the means. So here's another day where we have a really extended downtrend. We're below VWAP this whole time. The market opens all the way down here. Look at what happens. We are bouncing above the second standard deviation. Now this is what I'm talking about. Do you want to be shorting here, or do you want to be looking for potentially reversal? Well, what ends up happening? We see a break above a high, right? This dip here would have been the perfect opportunity to buy, looking for a reversion to the mean, right? So you're buying towards the lower band and you are selling towards the VWAP, okay? And that would have been a pretty nice trade, okay? Theoretically. So now you not only know when to trade with the trend, but you also know when to start trading against the trend, and it all makes perfect mathematical, logical, simple sense. So what are you waiting for? Get out there and start trading.